But this here, I could tell you, learning how to day trade is simple. The strategy I've learned from my mentor, which is just a general strategy, is called a breakout and retest. And it's three key things that you look for. One, once the setup presents itself, you there's a particular condition that you look for or pattern that you look for to enter the trade. Simple as that. Once you enter the trade, then you look for potential target markets, and you already have that, or not target markets, target levels. This is where you've already done your technical analysis, and you're going to exit at these particular points once they hit that point. So you're either going to hit those points first, or you're going to get stopped out of your trade. And if you planned accordingly, you should have a stop loss limit. Like I said, mine is 3 to 4%. So what we have is we look for three different conditions for a particular stock. So we mark out, and these are what's described as key levels, or AKA pricing zones. We have the pre-market high and low. That's number one. Number two is the previous day high and previous day low. And then number three, we mark out the first 5 minutes or the first 15 minutes. So basically, what you're looking for is a simple breakout, either above those key levels or below those key levels. So what you're looking for is simply a breakout once the market opens above this key pricing level or pricing zone. And then the second thing we look for is, once we break out above that key level, is a retest to that level, to that same level. If buyers step in and hold this pricing zone, we'll see that because we'll look for strong price action that indicates buyers are stepping in. The way people make a lot of money, and you can do this with very, very minimal positions, right? So you can make $100 a day, $200 a day, $300 a day with a small position as low as $300. And the way in which you do that is you have a number of contracts, and once you reach certain target levels, you just start to leave those, trailing contracts. So let's say you have four, and let's say you hit the first target, you scale out of one contract, you hit the second target, you scale out of the next contract, contract number two, hit target number three, you scale out of the third contract, and then you leave that fourth contract running.